What is Forex? Forex is short for foreign exchange. It is a financial market in which people trade different currencies. What does this mean? We always trade something for another. For example, for purchasing a laptop, you pay money. It is the equivalent of saying that we are selling money and buying a laptop, and vice versa, the seller of the laptop is buying money in exchange for selling the laptop. Now, what if you want to sell and buy money instead of products? Well, you must enter the Forex market. Forex is a worldwide financial market in which you can trade the currencies of any country in the world and essentially make a profit from the difference in the price of those currencies. As stated previously, a transaction has two sides to it, meaning that you are trading one thing for another. How does this happen when you're exchanging money? Well, you are selling one kind of money and buying another kind of money. For example, selling euros in order to buy US dollars, or selling England pounds to purchase Canadian dollars. This is called a Forex pair, and these pairs are symbolized as Euro USD and GBP CAD. Every currency in the world is written as a three-letter symbol, which tends to be formed of two letters that stand for the region and one standing for the currency itself. As an example, you can see in this chart Japan's currency that is called yen, and the symbol for it is JPY. You can also see the nicknames for the different currencies, and as an example, one Canadian dollar is also referred to as a loonie. So let's take a look at another example. Let's say that 1 euro is equal to 1.4 US dollars. What does this mean? Written as a fraction, it means euros over USD is equal to 1.4. In Forex pair format, this is written as euro USD equal to 1.4. Here, euro is the base currency, and it is in the numerator, and USD is the quote currency in the denominator. If Euro USD is trading at 1.4, then it means that 1 euro is worth 1.4 US dollars. If the euro rises against the US dollars, and this usually happens when the economic condition of the countries that use euros as their currency gets better, then a single euro will be worth more than a US dollar, and the pair's price will increase. However, if the economic condition of the US gets better, then the pair's price will decrease. So what if the US's economic condition gets worse? What will happen then? Well, you can look at the fraction. The USD is in the denominator. So if it gets larger, then the value of the fraction decreases. By analyzing these changes and trading these currencies, we take advantage of the differences in currency values and make a profit. So if you think that the base currency in a pair is likely to strengthen against the quote currency, you can buy the pair, referred to as going long. If you think it will weaken, you can sell the pair, referred to as going short. Note that in a Forex pair, if either the base currency or the quote currency is USD, that pair is referred to as a Forex major. For example, the Forex pair USD CAD or Euro USD is called a Forex major. Other pairs that do not have USD in them are called Forex minors. Thank you for watching this video and subscribing to our channel. Don't forget to like, share, and comment, and let us know what contents you would like to see next.